Good morning. Good morning. Welcome to today's live stream. We're so pumped that you're here. I'm glad that you're here. Welcome. Today we're going to be going over live price action. I'm going to be sharing my daily trading bias and giving you a front row seat to all the action. We do not have much major news today, so we'll see how the market wants to do, but we'll go ahead and take a look and see what the market wants to do. But if you're watching after the stream, you can use the chapter markers below the video to find all the trades that I've taken, along with a detailed explanation and why. Lastly, if you are looking to take your trading to the next level, there is the stab into the previous day low and the daily fair value gap. So we might see a long here. So keeping an eye on that. But if you are looking to take your trading to the next level, you can use the code DTJ, and you can get anywhere from 50 to 90% off your next eval account. I believe currently, as I've checked this morning, evals are at 50%. There's a 50% discount, and the code DTJ will give you the most updated and accurate discount that Apex is offering. So feel free to use that there. And lastly, we are in a promo for the Purpose Driven Trader Academy. You can use the code December or DEC 2024, which will give you a discount if you're interested in joining the Trader Academy, which gives you access to the day trading course and the Purpose Driven Trader community. That community we're building, and so we'd love to see that grow even more and have you a part of that. So with that, let's go ahead and open in prayer and get started. Father, we just honor you this morning. We honor you with our trading. Father, I just thank you that you've given us the wisdom to read the markets. You've given us patience to wait for our setups. Father, we choose not to chase. We choose to wait and wait patiently for what you have for us. We honor you, Father, with our trading. In Jesus' name, amen. Good morning, folks. Northern, good morning. Phil, Jamie, Alki, Greg, Guttenberg. How you doing? Welcome. We only got a couple days left of 2024. Glad that you're here this morning. ES took previous day low. NQ did not. Never mind. Yes, NQ just swept the low right here. So I'm interested in longs. We have our opening range gap already set. Sitting right here, we have a 15-minute fair value gap sitting up here, overlapping with the new day opening gaps. And then our midnight open is sitting right here. So it looks like we've already grabbed the midnight open during 7 a.m. It did not grab it in London session. But yesterday, it ran all the way up to the level I was expecting it to run. Up to the new day opening gaps. I thought that's where it wanted to go, and it did end up running up there before it sold off and basically consolidated in the afternoon. We got off right before it started pumping. How convenient. Filled all of this down move here, and if we look on a 4-hour time frame, we came up to that breaker that I thought that we might come up to. We came up to that and actually wicked even up into this 4-hour fair value gap right here inside this larger fair value gap. So at this point, I'm looking at lower prices, but I would like us to go up first. Considering we just ran the previous day low, I really don't want just a complete sell-off right now. I really want us to run some of this liquidity that we have here. It looks like we already did some, so I guess if you wanted to see a sell-off, we really could. But we're also in a daily fair value gap. So, and this is the first exposure to that daily fair value gap. You can see the daily fair value gap right here. That's the daily fair value gap. We have a previous day high sitting right here, Friday's high. We'll mark that. I'll stick that out here. So we have Friday's previous day high sitting right here. Maybe it would want to come down and rebalance that. And then we have our previous day low right down here. We'll see if it wants to reach for that. Sorry, not. This would be Tuesday's low. Good morning, Blake, Chris, Northern 1 hour fair value gap. Let's check out the 1 hour Northern. We are in that 1 hour fair value gap right now. And then there's a 1 hour below the previous day low way down here. Here's our little bit of an expansion in here. Got about 6 minutes before market open. Samuel, good morning. Glad to have you here. Let's get the like button up to 15 likes, folks, and we'll look at taking a trade on screen. Give me the green light, so to speak. But if I was to say, I would like us to push higher before we go lower. Honestly, the opening sell-offs that just continue on are some of the hardest to trade. I would not like that quite yet. I would like us to push up into this opening range gap a bit, run into midnight open, maybe the new day opening gap. But if we refuse to get back up above the opening or the previous day low before open, we may see a little bit of a sell-off. Samuel, thank you. I appreciate it. It's the easiest way to let people know that this is more than just trading, but it's about having a kingdom mindset. It's about living for Christ. It's about having impact beyond just making money for yourself. So that's what this channel is about. J Money, good morning. The 827s. I like lowers too. I really wanted to go up first. Just not sure if it's going to do that. We got 4 minutes. I would like to take my 930 model, but I'm probably a little hesitant on taking it this morning. I want to see a push higher here, but we may not get that. I think they're in my pants. I'm sorry. Yeah. Give me a second, folks. I'll be right back. Okay. Good morning, Ted. So if you haven't put up your on here the previous day low, previous day high, the new day opening gap, the opening range gap, we should probably do London low or London high. London high was grabbed. London low was grabbed. There's no we don't have we don't have to go any higher. We may just get a straight sell off here. All right, market opens in 1 minute. My screen hasn't been working, so on the opening price, we weren't able to get up to the previous day low. That's pretty heavy in my opinion. All right, so we just touched previous Friday's high, sitting right there, and then we got the previous day high also right here, which frames out the daily fair value gap. We also have our previous day's opening range sitting right here that was never filled. I'm open for a move higher or lower at this point. I really want to see higher. I want to see us push up into this area. But if we're heavy, I'll take a retracement and then play a continuation to the downside because it's obvious we are heavy. Fill the 1 hour fair value gap, like said in the chat. Yep. I think that we may even fill this daily fair value gap. I'd like to see if it wants to find support inside here and move higher. I mean, it could move lower. Let's see, did we tag this? We never tagged these, the 2020, the 24th new day opening gap. We haven't tagged those either yet. So these are open for being for a target as well. We're going to remove this. I think the new day opening gap sitting down here is of interest. Yeah, these are some big candles again, folks. This is 20 handles between these numbers. Now those are 10 handles. So this drop has come from 817 or from let's see. From opening price 846, we're down 60 handles. Now, I'm not doing this on screen, but I have taken a couple small scalps to this. I'm not going to do that on screen because it's not my model. However, I've seen sell-offs like this and how big these candles are. When I see a retracement here, I'm just going to go for 10, 15 handles. And I've taken that twice. All right, but now that we're at this new day opening gap, I'm not going to consider doing anything at this point because I could see this as a potential place for reversal. So if we get a retracement here and I want it to continue going lower, you got to understand the new day opening gap here can be a place for reversal. Now, we may run for this previous day low that's sitting right here, but I'm not going to take the chances. There wasn't any key levels between this low and here. We had this, but we started moving lower and closed below that already very quickly. So it made sense that I could try to scalp on this momentum. Just I'm not going to take any extended type of trade. That's just not my style of trading. So we'll see if it wants to push through this. And if it pushes through this, then it changes our analysis and we got to find a lower price. And that may be the previous day low. But one of my least favorite types of moves are these ones right away. Actually, I would like this over just straight consolidation. I'll take this over straight consolidation. It tells me we got at least some decent price action. So, again, what did I say? I said, watch. I would not be taking a retracement. I would not be going short right here because this is where we can get our retracement. That we could see potentially price move the other direction. If it doesn't, it doesn't. I mean, I can't predict the future. I just know where I wouldn't and where I would consider trying to take a quick scalp. Is it? I mean, you could consider that, Ted, from right here, from Monday. There is some, I would say this is all consolidation. I remember this. I remember Monday. It was nasty. It just did this slow climb. All right, so look how we run past it. So my whole analysis was incorrect. But I'm not going to take that chance, personally. Let's jump to the hourly. See what we got down here. We got a super small fair value gap on the hourly, irrelevant in my mind. On the 4 hour, we got nothing here. All of this is covered. So we're looking at this previous day low. Look how it stopped right before it. Let's see if it wants to push through it or not. Down to 520. 520s are sitting right around here. 520. The new week opening gap. I could see the new week opening gap as an area. We have tagged that in the New York session. Previous day low is down here. But I did talk about us being in a market maker sell model. I just did not want it to sell right off right away. Because then it's hard for me to get in and be a part of these. So if we were going to try to take and play the continuation of the short, I don't know if I would do it now because we hit a previous day low. But running up to, you'll find that in these types of price movements, if we drop down to like the 15-second chart, you'll see all of these levels respected, all these order blocks respected. So order block respected. We move lower, order block respected. Order block respected. Didn't even come up to it on that one. And this point, we're coming back up to this order block, and we'll see. But this was a previous day low that was swept. I'm not sure if it will run that or not, but this is how you would potentially play a continuation to the downside, is when it runs into that order block. I'm not doing that right now because we ran that previous day low. I'll wait for some type of retracement. Give me a breaker, a higher high, and then a displacement lower. But that right there is that order block entry right there, and it's already displaced 10 handles, 20 handles. It's not my cup of tea. I know I probably could get better at it. I call it out all the time. At this point, it's just a matter of I just freaking need to do it. Just need to take them because they work. But because we have I think my mental barrier is when we run the new day opening gap, when we run the previous day high, when we reach and fill out the daily fair value gap, when we run this previous day low, these are areas that I would consider myself a reversal type trader, that when we hit these levels, I'm more skeptical for the continuation because I'm looking for the reversal. So when it comes up and hit these levels, I'm saying I want to see it disrespect this because I want to look for the opportunity to go long, not for the entry for the continuation lower. But I know I'm leaving opportunities on the table by not capitalizing on this. So I know it's an area that I need to improve on. By the way, previous day low is actually Tuesday's low, right? So I'm looking, this is Tuesday's low. Is this Monday? This is Monday's low. This is Monday's low that we just ran. We don't have any significant news for the rest of the morning. We have crude oil inventories at 1 p.m., which is an orange folder news. Equilibrium of what, Northern? Yeah, it's just... And by the time I'm like, okay, I'll try it now, that's when it reverses. So it's one of those that when you start seeing the sell-off, if you want to play these order block plays, yeah, we didn't get any for the first, 5 minutes or so. You can drop down to the 30-second and you can play a 30-second one. Because these are, it's better to take them at the beginning than towards the end. We are the Thursday's high. Previous day high is a breaker that's sitting right here. This is a breaker. We on the 4-hour chart, you see the low high, lower low. We break higher, and there is our breaker. So again, another area that I'm careful about seeing it continue lower. I'd rather see it displace and break above this up close candle right here and show me that we want to start moving in that direction. Way to go, Phil. Congrats. 1K scalp is a scalp that you want to walk away. Be done for the day. But we'll be patient. We're going to wait for something nice. If you guys are appreciating the commentary, we got a decent amount of people in here. Hit the like button. I'd greatly appreciate it. Tells me that I'm doing something right. Besides not taking any trades. When you do 10 handle scalps, how many and which contracts do you like to take? I only, right now I'm doing 5 micro contracts. That's typically what I will trade until I'm ready to go heavy. If the market's looking really good, then I'll take 10 micro contracts. But then I just look for 10 handles. I have a bracket order set, so and with no stop loss on that, so it doesn't get stopped out immediately. But I'm watching for a 10 handle loss in case it goes 10 handles. If it goes 10 handles, then I'm usually closing the trade. These are the types of moves that I get. I'm like, I don't want to go short when we see stuff like this. You know what I'm saying? Now, I would like it to see come back lower, maybe find support here, and then move higher. We'll need a 5-minute change in state of delivery. The ES is filled in the daily fair value gap. Here's ES right here. I use ES for in my analysis for NQ. All right, so we filled that on the daily. We also have another breaker on ES right here. Do we have one on NQ? I doubt we do. No, we got a lower high on NQ. We are in the 10 a.m. macro right now. This could be a play you could take right here. I would give it an A-, not an A+, because we didn't sweep the high. I would have rather see this high swept right here. But it could be something for a 10 handle scalp. So it's not what I would want to take, so I'm probably going to let it pass. We did hit an order block, so there's reason for it to consider it. But we also did hit a breaker, a higher time bullish breaker. So, all right, this would be the entry right here. I'm not taking this. We did get a 5-minute change in state of delivery down here. Relatively equal highs. I took a quick long on this reaction right here for 10 handles towards that high. It just closed. I mean, I would rather be honest with you guys, even if I don't put it on the screen. That's just my philosophy, is I want to be as transparent as I can. But some of these trades, I know I don't want to put them on screen. I mean, because it's not my model. When it's my model, that is what I'm going to be putting on screen, because that's my bread and butter. But some of these are just trades that I take from experience. Like, I knew I didn't want to take this, and when I saw it being aggressive here, we're probably going to run for these relatively equal highs. So then I just took a quick scalp for 10 handles, and then I'm out. So it's just, some of those trades are just from screen time, and those aren't necessarily model type trades. Now, there's probably a contrast of opinions on taking those types of trades. That's what I mean. You could probably talk to or hear a handful of people that say you should never do that. This is why. If I'm going to teach a model, I'm going to teach that model here. I'm going to show you, and that's the inversion, and that's my breaker model. And I don't always take those sometimes because I don't like the setup. So trading is as much technical analysis as it is an art form. I mean, there's some just, it feels right. It looks good. And sometimes I've been wrong, sometimes I've been right. And that's just the truth. That's right, Northern. I mean, that's exactly right. So in the meantime, I'm still waiting for that clear setup that could give me 20, 30, 40, 50 handles. And on a day like today, we may not get that. We may not get that. I'm loving this volatility. I'm loving that we displaced. It tells me that there's some opportunity. But I'm not liking how we disrespected this. Then we ran for the high. Now we're running lower again. I'm not liking that portion of this. So we did make, remember how I mentioned we would have a high, low, higher high, and we displaced lower? Now this might be an opportunity where we could, depending on where we go here, we could play something like that. We close down here, come back up into this fair value gap. Come back up into that fair value gap. That might be an opportunity. If we get up here, I'll take one contract short. One or two contracts short. But it needs to not run this low. I'm going to wait for the stab into the fair value gap before I go short. We did hit that low. You could have taken a position here. I'm being a little more conservative, waiting for us to get into this area here. And I'm not going to take it on the first push. I want to see us reject it before I take that position. Okay, there's a stab. Hang on. I'm going to wait, see where this candle closes in 24 seconds. All right, I'm going to take that. I have a 10 handle here, but we're going to move it a little bit lower. If we close above this, I will. If we close above that, I will close the position. My only real concern is that we did hit that breaker, And this right here is that breaker level again. So this is why I'm on a reduced size. Uh, 10 o'clock here is in 40 seconds. I'm going to add one more position. I need it to close below this green candle. Barely. It's not as convincing as I want. That's 9 o'clock. We could get a reaction that goes the other way. I was hoping for the displacement lower. Let's see what happens. Still watching this high. Nice. We should run this low. TP1 just taken. We'll expand this a little bit lower, see if we can see this run. It's apparent it wants to go lower. I'm just going to close that. Yeah, I could let it go lower. We could run down to the new day opening gap, but it's a weak area of mine just to close the position. I'm not going to lie. But there's our breaker. For those of you that wanted to see an on-screen trade, you wanted to see something play out, there is our on-screen breaker. That's a setup I will do on screen. And nice sell-off after that. Should have left a runner. Should have. These are my opportunities. I forget, folks. So here's one thing that is very important that I know that for me I need to work on. When I came into this today, my mentality was already to try to get 10, 15 handles, close the trade. Because there wasn't any news. It's right before the new year. I don't know what the market's going to tell me. For me to learn, because I'm not the best at holding long trades. I'm not. I mean, I have had 50, 70, 100 handle winners. But the only reason I was able to do that was because I came into that trade with the sole focus of holding my trade. So I had to make that a very focused intention on my end so that I could exercise that muscle, because it takes effort to exercise muscles. It's a lot of work to exercise a muscle. It's energy. It's effort. So I didn't come into today with that mentality. And clear evidence in that trade. I could have probably got another 30 handles, but I didn't, because I mentally wasn't in that state of, okay, I'm going to make myself hold, because it's not a muscle that I have built out yet. I know it. I know it. It's just an area of my trading that I'm going to improve on. But when I come into the day, I literally have to be, all right, my primary goal is taking off my initial 10, 15, 20 handles, and then I'm going to hold. I'm going to hold to my target. I didn't do that because I didn't have one. So as you're looking at your trading, when you identify what areas of your trading needs improvement, that's when you go, okay, today I'm focusing on this. And then with all your effort, you do that thing. Oh, Ted, I cut way too early. I'm telling you. I'm telling you, it's for me, I know that I mentally have to get myself to that point to make myself hold, because I have spent a majority of my trading career I started off taking 5 handles. Then I went up to 10 handles. Now my typical, what I normally take is 15 to 20 handles. So I know if I want to increase that, I'm going to have to make it my primary focus. Way to go, Wilhelm. I'm telling you, the breaker was right there. We disrespected this. It showed us we wanted to go lower. And let's see, I got in on that candle right there. And I went past this. So I sold right about here. That still has 60 handles. And I'm complaining about 60 handles. But, I mean, there was no reason for me. What I'm trying to say is there was no reason for me to cut that trade. There was zero reason for me to cut that trade except for the fact that I haven't built that muscle yet and it wasn't my primary focus. Looks like the model I have been tracking on the breaker is working great for the 3SD target, 3 standard deviations. When you have a movement day, absolutely, I'm sure it works. I'm not a big standard deviation guy. I'd rather run to targets, and if I had to put money on the trade, this is where you'll see a decent retracement. This right here, November or December 23rd, we'll hit either this high or low, and then we'll have a 40-50 handle retracement at least. If I was to put money on it, that's what I would do. That's my bet. But I'm not complaining. I'm very green today. Even taking just 2 micros, folks. I'm very green on the day on multiple accounts. I'm over $1,000 on my accounts combined. Just about 1,000. What did I say? What did I say? I mean, no, it didn't touch it. Is 66.50. Less than a handle. And we moved 40 points. We retraced 40 points from this point. New week opening gaps are legit, folks. They are legit. Legit draws. Legit points of interest. If you do not have new week opening gaps on your charts, you are making a mistake. I teach all about them in the course. If you want a discount on the course, you can find that in the description of this video. We're doing a promo code DEC 2024. Check it out if you want to join the community. But that one trade right there, that one trade is all you need. That's all we needed to do. Yeah, you can keep trading. I've just learned that when I continue to trade, it's not good. So, I have just closed my accounts. And I don't have any new eval accounts because the discounts, it's only 50% off on Apex right now. So, even though I have a code for you to use, don't use it right now. Wait till New Year's. They'll give it. I'm pretty confident they'll do a New Year's deal. %, Phil. Especially if you're starting out. And yeah, you probably had big days, you've had horrible days, but if you can consistently get $100 a day, you can get $10,000 a day. I'm telling you, if you can get $100 a day, you can get $10,000 a day. It's just a matter of time and increasing size, which creates more emotions that you have to deal with. That's why I haven't really increased my size that much, because I don't like those. You have to revisit it every single time. Going from 5 contracts to 10 contracts, I've already done that, so I could go to 10 contracts and I'd be fine. But going from 10 to 15 or 15 to 20 or jumping to micros, going to 2 to 3 micro or mini contracts, you have to deal with your emotions every single time you increase your size. All right, so I do think that we may see some type of retracement here, a continuation. We may mess around this area for a little bit, but if I had what I wanted to see, honestly, I think we could still go lower. I think we could still go lower. This could be a nice sell-off. But the best ones are if we get a deeper retracement that gives us a fair value gap to the downside. I would want to play the inversion. We got a nice breaker here for that opportunity. That was a nice breaker that we took. The other style, the other trade that I take would be an inversion. Let's see if there's one on the 30-second here. There isn't one on the 30-second, so we would be sitting and not doing anything. But I would not be going short here. There is a 30-second breaker. There's a 1-minute breaker here, a high, low, higher high. Right there. I'm not as a fan of it. I would honestly want to see a deeper retracement before taking this, but that just depends on your risk level. I only stick to 4 contracts trading my own money. I try Apex and use your code. Well, I appreciate it, Phil. Yeah, I don't trade my personal account hardly at all. My goal is to get my account. I'd like to have 10 funded accounts. I'd like to get up to 10 funded accounts. And then once I'm covering all my family's expenses back, because I'm not at the point where I'm covering my family's expenses yet. Unfortunately, my family's expenses are about $10,000 a month. Now, I would not be taking this right here, folks. Look how we ran and we hit the lower one. And we reacted. I would not be taking this breaker. I don't like that signature in price. I mean, it did just give you 15 handles, but I just don't like it. I think we continue through here. Yeah, we just gave a green candle here. I think we push through this. But my goal is to get to the point where I'm able to cover my family's expenses, and then anything extra I'll be using to build a personal account, because I think that is important, building your own personal account, simply for the fact that prop firms may not always be here. I can't put my livelihood inside another company. I want it to be my own. So my goal is to build to that place. Do I have the funds to be able to start my own personal account? I do, but we use that for other investments. We buy real estate, we buy gold, we invest in the S&P 500. We do all kinds of different things. So it needs to come from trading for me to build that account. Because when I first started out, I started out with like $40,000 and lost about all of it when I first started out. So I'm not going to add more to it. I made that decision a long time ago. Do you think I can wait for retracement to the 10 a.m. 1 minute fair value gap, then short? For me personally, Samuel, I don't think I would do that. Honestly, if we get up to this point, I'd want to see it break through it and then run these highs, these equal highs right here. So I would be trading it long to these highs. So it would look like this. It's roughly a 1-to-1 trade. That's what I would look for if I was doing that. Because of how high this is, if we get this high, there's a good chance we're going to run these equal highs, and we could run these here. Or we may come back up to the new day opening gap. So it looks like this breaker did play out. It's just not something that I would want to take again. Do you see what I'm saying? Especially when we have these levels here that we could just find support in. It looks like we may do that. I mean, I might be speaking too early, considering we may just push lower. And we have this previous day low sitting down here. But as I trade more, I'll get better at these types of days, and I'll be able to hold for these. Because you're going to see traders that, got in where we got in at our breaker, and they're still holding their trade. They're holding all the way for this previous day low. You're going to have traders that are doing that. I'm personally not there in my trading yet. I will be. There's no doubt in my mind I will be. It's just a matter of time. And the more I sit in front of the charts, the more I become familiar with how price moves, the more I've seen it consistently doing certain things. And I'll be honest, when we are in these trend days, this happens a lot. And now I'm building confidence that maybe on another trend day, I'll take it. And I'll hold it for longer. Maybe I should have held my one micro contract. I would have been up another 125 handles to this point. And on these trend days, one micro contract can really pay out, especially if you copy your accounts. Kyle, good morning. First time seeing your name. Welcome. Glad you're here. Psychology is 100% different when you're trading real in your own money. Yeah, it is. I would say it's when it comes to funded accounts, when you've gotten payouts, it's very similar. It's very similar. The issue that I've had with my funded account or with my personal account is because I let it get so low, I treat that account as a play account now. So psychologically, it's become an account where I take more risky trades, and that's horrible psychology. I can't do that. So I just chose I got to stop until I build it up to a place where it's like, all right, this is serious. Because I can't allow trading like that. So as you trade more, you become more aware of how you're processing and how you're thinking through different things. And you got to be so attuned to your current state of mind. And when you're doing things, you got to know when you're on tilt. You got to know when you're revenge trading. You got to know when you have that feeling of can't stop. And those are the things you got to be able to identify and have the willpower to walk away and respond appropriately to those scenarios. So right now, I feel fantastic. It would be very easy for me to just open my account again, say, I'm green. This looks good. Let's take it. I've done that so many times, and I've had losses. And that's the beginning of the spiral down of where I take my, $1,000 green day down to 250 or even negative or down 400. I mean, I can give you tons of examples and scenarios for that kind of stuff. So when I'm green and it's healthy, I know that I just have to walk away and be patient. As I grow as a trader, I'll increase that. I'll be able to take more trades. I'll have a clear mind. But that just takes, I'm learning it just takes a lot longer than we want. It takes a much longer than we think it should. I wish I had a eval account. I'd trade an eval account right now. You bet, man. Have a blessed day. Take care. God bless. Have a great weekend for you. And then we'll be back on Monday. We'll see you Monday. You too, my friend. Take care. MR, have a blessed day. Samuel, agree revenge trading is the toughest hurdle. Yes, it is. Understanding your psychology, just understanding how you think, being extremely present with yourself, not lying to yourself, not telling yourself that you can get through it or work through it. Totally. Kyle, I've never tried the funded account route. I usually pay SPY options off the ES futures. I'm interested in trying the funded account route to ease the pressure. Well, all right, think of it, Kyle, let's think of it this way. I don't know where you're at in your trading journey, but here was my logic. Was when I was trading my personal account, when I would have a loss, I would, trading one or two micros, I still would be losing $50, $60. And at that point, I put an account cap that if I lost $60, I would be done for the day. So it would lock me out of my account. Well, I was hitting that, it seemed like every day. $60. Boom, 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 boom. And because of that, I was like, well, if I get an eval account, that's going to cost me either $29 or $33. And then I could take countless more trades, not because I want to overtrade, but I could have that for 30 days without paying anything except for that $30. And how much money am I actually saving and still learning in the process? Now, the other side of it is people go crazy and they overdo it, and then they spend way more money on their eval accounts. But if you can be disciplined and follow your rules, an eval account will save you a lot of money as you're building that muscle of consistency. So I started doing that, and it just took a lot of the extra pressure and reduced it to having just a little bit of pressure. And then once you pass that eval account, you get a funded account. And if you do what a lifetime account like I do on mine, you pay a one-time cost, and you can have that as long as you don't blow your account, or as long as you don't go below your initial. Let's just say you do a 50K account. As long as you don't lose $2,500 from 50K, you're good. Now, when you get above 52,500, that is your true beginning balance. If you can stay above 50, if you are at 52,500, you've gained that much. You've had increase in your account. If you lose 52,500 from that point, you would blow your account. But anything above that, it doesn't matter. You could be at 60K and lose 5K, and you'll be fine. And it was none of your own money. So it definitely, I think there is some huge pros in it, but I would say the second pro is it required me to follow their rules. Their 30% drawdown rule, their 30% gains rule, their 1-to-5 ratio rule. All of these are their trading rules that they have to make sure you're trading in a manner that isn't whimsical, that isn't just gamblish style trading. They don't want that. And quite frankly, I don't want that in my own trading. So it helped me to be consistent so I could see a payout. And to me, there's a lot. I really think there's a lot of benefit. Prop firms have filled a spot in the market that was needed. Yes, you can say a lot of negative things about them. Any of them. But they fill a spot, and as long as the regulatory rules allow it, they're going to stay. Their rules might change because they need to make sure they have liquidity. That's happened many times. We've seen that take place. But because it's such a new industry, as they figure out what their rules need to be so that they can stay profitable, so they can stay afloat, then we'll see it kind of balance out. And the reason why I chose Apex is because they're the firm that has been around the longest and hasn't gone under. I would stay. I wouldn't touch a brand new prop firm with a 10-foot pole. No, I need proof that you got liquidity. I need proof that you can sustain big payouts, and Apex has done that. So, despite all of the flack they get, they pay out as long as you're following your rules. So that's kind of that's been my logic on there. And I will eventually get to my personal account again. But right now, my goal is just to keep build my consistency, build my account size, and add on to those funded accounts. I'd like to get up to 10. I would love to get to 20. But I don't do the mass, get 10 eval accounts and pass them all at once and then have 10 funded accounts. I don't do that. And maybe I'll do that later, but right now I'm intentionally only do one at a time, two at a time, for the fact that I want to prove consistency. And I've been doing that. There's areas in my trading that I see that I know I need to improve on. It's just a matter of time before I have that confidence, or I'm like, okay, now's the time. Now's the time I could go get 5 eval accounts and I could pass them and then have them as funded accounts. Phil, question on Apex consistency. Let's say you execute 46 trades in a day, then next day you execute 4 trades and all profitable. Is that recognized as consistent? Yes. But you're going to have other rules you'll run into. So if on the 46 trade day, if you you want to typically keep your profits 30% of your starting balance. Now, as you increase your size, or as you increase your account balance size, that becomes almost irrelevant. Because if you're going to want a payout, let's just say you want to get a $1,000 payout. If you make $1,000, if you have a $1,000 trade and then you want to go withdraw it, they're going to deny it, because you need to have your largest trade in that request that you're making needs to be less than 30%. Now, if you're making $1,000 every time you're trading, well, guess what? You're not going to have that issue, because you're consistently taking home roughly $1,000. So the only negative on 46 trades compared to 4 trades is if that 46 trades is a big, huge day compared to your 4-day trades, then you might have an issue. Now, if your 46 trades day was, $100 a piece, leaving you at $4,600 at the end of the day, but then your 4 trades that you took on another day were $1,000 a piece, you're fine. You would be fine. Copy trading is amazing. If you can get 20 accounts in copy trade, a 10-handle trade is $2,000 a day. Crazy? Exactly, Samuel. This is why I don't like, if I get up $200 on an account, I remind myself that that's literally $2,000. $4,000. That's $4,000 on 20 accounts. So the opportunities are huge. It just takes time to get there, and you have to be patient and be disciplined to be consistent in that process. And for me, on my journey throughout 2024 has been that I've had immensely amounts more of consistency, but I still see the areas that I need to improve on. And it's just a matter of time. And the more I talk about them, more I share them with you, the more we keep them in the forefront of our mind, the better we become. All right, I like this right here, but I don't like the time of day. It's 10:30, so I see this as potential manipulation. But this 1 minute inversion right here is a legitimate setup. It's reached a little too low for me to be interested in it. See how low it is? I just can't do that. The 2 minute, we wouldn't have gotten it. The 3 minute just closed. So that's a trade entry right there, but you're talking about a 30 handle drawdown. So it's just not worth it. The risk to reward isn't there on this trade. And we just ran the low. So my guess is that's all we're going to do, and we start moving the other direction unless we continue want to sell off. I don't know what it's going to do. Honestly, I would probably be waiting another 15 minutes until we hit the 11 a.m. macro and then see what we have for a potential setup. Yeah, hopefully that gives you some understanding, Phil. The rules on Apex aren't that bad. And in my opinion, they're honestly rules that we should have in our own trading. So even though they don't alert you when you violated a trade or violated a rule, and they only do it when you request a payout, which is stupid, the rules themselves are to our benefit, in my opinion. Now this would be a nice re-entry, a nice retest. See how we wicked into this? This could have been an entry short right there. You would take that short and you would reduce your risk because your stop loss is a lot smaller. Your risk is now a close above this. Right there, just 3 handles. And then you can target this low. So when you get an expansion like this, the only reason I wouldn't take this trade now is we already ran the low right here. We already swept it, so it invalidates this whole trade. But if this low wasn't ran and we came up and we tagged this inversion fair value gap, I would go short. That would be for sure a short trade for me. But we swept the low, so it invalidates the whole trade idea. When price grabs liquidity, it can run the other direction. I do like the fact that we still have this previous day low here. I would have a hard time going long considering the sell-off that we've had and that this previous day low is really close. I mean, we're talking 30 handles away. Yeah, and we've also displaced below this one. We could get some back and forth around this area until 11. So I would wait till probably 11 to see if it gives us a clean setup to the downside. And to the upside for that matter. I would be sitting on my hands probably for the next 15 minutes. Yeah, I've done those types of trades where you think that we've made a bottom and we might move higher. But if you're going to do that, it's better to get confirmation. So my confirmation would be a 5-minute change in state of delivery. So in this case, I would need to see the 5-minute candle close above this level right here. Because these are 2 consecutive down close candles. This candle is the one that made the low. So I would want to see a 5-minute change in state of delivery before I would do that. Personally, that's for me. Unless there was an inversion fair value gap in here and an aggressive candle moving very quickly. Those are the only 2 scenarios that I would go long. something like this. This you could have taken this inversion right here. I just was talking, I wasn't paying attention. This is the type of inversion long that I would take. Okay? It technically wasn't valid because it didn't close. But if this closed, well, I guess it did right here. So it closed here, I would take that to this high. So this is a beautiful inversion that I would have taken because of how aggressive this candle would have been right here. Aggressive, closed, aggressive. Hit the high. Ran this high in this candle right here. But where it closed right here, right? So look at this on the 5-minute. Even though it was very aggressive, where it closed, it didn't give me a 5-minute change in state of delivery. So I know that I can confidently say that we may see lower prices. And that's exactly what happened. So if I want to have some more confidence, it's not 100%. It's not a 100% win rate or a 100% guarantee that you're going to see price move the other direction when you get a 5-minute change in state of delivery. But it reduces your risk and gives you higher probability type trades to the upside. And if I'm going to take a trade, I want a higher probability trade. So I'm going to wait for a 5-minute. Doesn't mean I can't take a trade long, but if I'm looking for that extended run higher, I have to see this. I could see an aggressive candle like these right here that I could take long and, get a nice scalp trade out of this and close it and be done. And then it continues lower. But if I want that extended move that's coming up to that fair value gap that you mentioned earlier, Samuel, I would want to see that you have to see that 5-minute change in state of delivery. And then guess what it would leave behind? It would leave a breaker right here. That would be a breaker that you could go long in. So we have a 5-minute change in state of delivery on the 5-minute. It closes above it. We wait for it to come back down to this breaker, and then you can take a long from that. That is a higher probability type trade. So would you say you made your main strategy is fair value gaps in? Yes. With order blocks, with breakers. And breaker is a glorified order block. So fair value gaps, inversion fair value gaps, and order blocks. That's 90% of everything that I trade. That's your entry right there. No, we didn't get the 5-minute change in state of delivery, so you could wait for that. But if this is really aggressive, that would be the entry. So this is a paper account. Way to go. So we got 2 minutes left for this 5-minute change in state of delivery. We did hit the 5-minute low. I'm willing to let that be okay. Actually, I probably would take more, so let's average down here. But if we close this 5-minute, this is why you wait for the 5-minute. This is a perfect example. So I took a long based on a breaker before we had a 5-minute change in state of delivery. Let's wait and see if we get that 5-minute change in state of delivery. If we don't, I bet you this trade fails dramatically. If we do, I bet you it plays out. That's kind of the logic there. So this is off of a 5-minute change in state of delivery, which is right here. Off of this breaker. And we would potentially could set our stop loss probably to the low of this candle. But let's see where it we got 30 seconds before this candle closes. So very important to see where this candle is going to close. This is a paper trade. Phil, yes, I have a Discord. The Discord is along with the Purpose Driven Trader Academy. You can find the link down in the description with my Christmas promo code. All right. Do we have a close? 10 seconds left. Okay, so this candle closed above this 5-minute change in state of delivery right there. Okay, that gives me significant confidence that we're going to see a big move higher or a bigger move higher. This is going to be the trade for the day. This is the trade. There's a swing high. You want to take TP right there. I would take one contract off. But this will be the trade that runs probably this one, and this one. These swing highs right here. And maybe reach up into this fair value gap. Now, it could scare us and reach down into this fair value gap. That's a very real possibility because it just left equal highs. So just because you get a 5-minute change in state of delivery doesn't mean you can't get a retracement down into this level or try to reach down and make you think that it's going to run lower. And I've seen these trades fail, but your probability is much higher that it goes higher. This is why we wait for those 5-minute change in state of deliveries. So, like I said, I would have taken a contract off there. And if you take a contract off there, you basically move your stop to break even. So this trade would all be completely over. But because this is a paper count, I'm walking through all these different scenarios while still in the trade because it makes it more real for me. Okay? So the most logical place to set your stop has to be below this order block, below this fair value gap sitting right here. So I expect price to find support inside this area here. If we fail this fair value gap, then we may see lower prices. But now we just left equal highs in our wake. So those should be retagged. And that's going to make for an explosive move if we can get up there. Let's check out the 15-minute. Let's see if the 15 minutes kind of give us the same signal. So the 15-minute, the only thing I don't like about the 15-minute right now is we just wicked into this 15-minute fair value gap right here. And it, as of right now, it looks like an institutional order flow entry drill. I mean, it just barely wicked into it and could move lower, but all the other signs are telling me we should see higher prices. God bless you, Samuel. So if we can run these equal highs, that's going to be a good sign. We'll take one contract off at this swing high right here. This swing high sitting at 10.09. But the other one, we should be able to reach all the way up into here. if we can get through this. And we're coming up to the 11 a.m. macro, so that's great. Things are looking good so far. We'll see if we can get up to this high and take a TP off. If we get up there, I'll move my stop to this swing low right here. I want to see this small 1 minute hold, ideally. Also, it has this 1 minute order block. We'll see if that wants to hold or where the body closes. Javon, good morning, my friend. All right, let's see if we can get a big pump right here. We respected this down close candle so far. Closed green. I would like to see a push right here. All right, there's our equal highs ran, and there's the aggressive candle. Our next swing high is this where our TP is. We should run into that pretty quickly. That's what I would want to see. This candle needs to close above these equal highs if we're going to do that. Okay, so we did close above that. That's a good sign. Next candle, we need at least a wick above the previous candle. We need to see that wick. Even if it doesn't close above it, we want to see that wick above it. If we don't, we just may get a larger retracement. Now, this is where we move our stop to this swing low. This should be relatively protected. We should not run this down here if our target is higher. And we could, we could run all the way back up to here. That could be a possibility, but we'll see. All right, so this candle did not make a higher high. Let's see what kind of retracement it wants to give us. All right, Ted, have a blessed day. Have a good weekend. I would love this to turn into an order block, meaning this candle close above this down close candle right here. There we go. Nice push. Let's see if we can get above that and the high at the same time. That would be a nice sign. Okay, not quite, but we should see we did create an order block here. Let's see if we can run this high. I want to see that high ran. Hardest part about trades like these is patience, is just letting the trade play out. All right, there's our higher high that we just made. That's a great sign. It's not very big, but it still works. We just wanted to see the higher high. Now we got this order block. Let's see if it wants to respect that order block. Now, in these types of trades, one thing that I have noticed is many times we'll start moving higher and then we'll just get this crazy whack aggressive down close candle. And I've been burned out on many of those, but it happens. This is why your stop loss has to be set appropriately. I just don't think it may come all the way back down here and then move higher. We'll see if it gets close. I may consider moving my stop to below this fair value gap. We'll see what happens. So we disrespected that order block. Let's see if it wants to respect this order block here. Want to see this order block? This would be a nice order block if we can get that closed. See how it disrespected this one, but it looks like it's respecting this one? Not all order blocks are created equal. And it wouldn't surprise me if we disrespect this one and we move back down to this order block here. So I said earlier I took that breaker short and I didn't prepare myself to hold. Well, in this trade I prepared myself to hold. It's a demo account, so I'm holding it intentionally for the purpose of building that strength of holding my trades longer. Even though it's demo, it's still important that you do it because I'm seeing this trade play out and it's giving me that confidence that the next time I see the setup like this, that it's going to work out. All right, this down close candle respected the midpoint or the mean threshold of this order block. We want to see it not move any lower than this if it's going to continue to respect this order block. We did have a 1 minute change in state of delivery right here. So lower prices could be coming. How much lower? I'm hoping not that much lower. We'll be watching this order block and this fair value gap. That's kind of what we're watching. Now we do have that previous day low. We do have a previous day low that's way down here, and that could be a lower target, and we're just retracing a bit before we want to continue lower. This is why if you're trading against the order flow, trading against the momentum of lower prices, this is where trades like these could not play out. I'm just hoping that we are on the right side and we at least get a little bit deeper retracement here and maybe all the way up here. So taking even, I mean, we had 30 handles. You should take at least one contract off at 30 handles. So 30, we got 30 handles on this trade. Taking one contract off is important if you're in a funded or a live account. This is a demo account, so I'm just forcing myself to hold and not sell anything here. Watching this fair value gap to see if we find support in line with this order block here. This is nice. Let's see if we can get a push higher right here. It's 10 a.m. or 11 a.m. This is the candle I'd want to see expansion on, or right around this time. Holding some of my weakest parts of my trading is holding through retracements like this. Because who wants to see you go from 120 ticks down to 60 ticks? That's hard. That's 50% of my profits lost. So these are some of the hardest things to do, and it's the main reason why I haven't sold anything. It's because I want to see this go this way, and I want to hold to basically prove to myself that these retracements are just retracements and they're not reversals. It just takes a lot of effort to do it. So you can do that on demo and protect your account and not have any losses. If we close below this fair value gap, which looks like we will, this swing low in this fair value gap is the next target, and I might have to move my stop just below it. The only reason this would fail is if we are going to see a lower low and we're going to run this previous day low. But this is an example of how I'm increasing my ability to hold trades for a bigger move like this. But if this was a live account, like I said, I've said it a couple times, I would have taken profit up here. I would have taken one contract and hold the other to break even. And in my funded account, I would not be in a trade right now. But right now, I'm intentionally not closing this trade, willing to take a loss on screen in front of you guys because I've seen these gnarly down close candles and then it just completely run the other way. Run back up the way we were going to go. So I'm intentionally holding this to see if it's going to play out that way again so I can build that muscle. I mean, it looks like I'm going to get stopped out. That's what it looks like. I'll admit that. We have a 15-minute right here that was filled or tagged. So on the 15-minute time frame, we absolutely could see lower prices. The hourly, no. We could see a retracement, or we could see a move higher from this. And the 4-hour, no. So the 15 definitely looks like it lower prices are in store. The 5-minute, we have a breaker right here. We want to see if it wants to hold inside this fair value gap. There's the tag. All right, we got tagged and got stopped out. So lessons learned from this are completely free on my end because I took a demo trade. I was already done trading. I was totally fine with taking and letting this play out for the purpose of education on my end and your guys' end. So lessons that I'm personally taking away. Even if I see a beautiful 5-minute change in state of delivery with a breaker, I need to take profit at swing highs. Preferably this one right here is the one that we saw. Okay? After the 5-minute change in state of delivery, which happened right here. So we could have waited for this retracement and taking our profit up here. Okay, so either that high or this high right here. Then I would have left a runner on and moved my stop to break even to protect my position and protect my profits so that it doesn't go against me. And I would have been stopped out well before we get way down here. So this would have been a 30 handle trade that didn't have the follow through that we were wanting. We still was a profitable trade on a funded account. I was willing to hold this longer to see if we were moving higher. Now, the next thing that I'm going to be watching as we're sitting here is if we in fact do move higher from this point, I need to take note of where the wick was and where the body was of the candle that stopped me out. If it moves higher, I moved my stop just at the top of this order block. What it's looking like is I should have moved my stop just below the mean threshold of this order block. Right there. This is the mean threshold of this order block. The wicks are what does the damage. The body closed inside this fair value gap. We could absolutely see price move higher. We could still see it move lower, and that's okay. I'm just looking at, okay, if it does in fact want to move higher, where would have been a better stop placement if I'm looking for that big move? And my guess is if it doesn't fail, if we don't move lower, I don't think we'll hit this level here. I think this will stay untouched because it's the mean threshold of this order block. And it's an ICT concept that talks about where you put your stops just below those in your order block. If it hits that level, there's a higher probability that it's going to run lower and fail altogether. So that's kind of what I'm sitting here watching right now is, are we going to find support in this fair value gap and move higher? If you appreciate the commentary, folks, and the education, do me a solid. I would really appreciate it. Hit the like button. It helps get the word out for other people to be able to see the same stuff. So thank you. So I'm sitting here waiting for this one thing. If it fails, we'll probably call it a day. If it doesn't, then it proved that this, in fact, was the appropriate place for a stop loss, and I'll probably call it in the end of the day for trading today. But I just want to see how this plays out here. I mean, I think this is a really good place to see another push higher. We have a fair value gap that coincidentally enough overlaps the new week opening gap perfectly. So to me, this would be a nice little area to see a push higher. But I've been wrong before. We'll see how it plays out. There is another long opportunity here. You could take this trade here. We swept this low, found resistance. If we push through this level aggressively, you can take that long to this high. Sometimes it's these trades after these bigger retracements that are the explosive ones. So if we start seeing explosive price action, we can take a scalp trade here. I don't know why it's doing that. Why does it have such a large... It'd be something like this. So 17 handles for a potential 7 handle stop loss. We found support in the new week opening gap, inside this fair value gap, swept these lows, hit an order block. If we can get aggressively through here, I would consider taking this long on a demo account because I'm done for the day. Now look at this candle. This is the telling candle right here. This is why we wait for fair value gaps to be violated before we take a long. It could still go long, but man, can you imagine going long right here and now being in drawdown by 15 handles? That would suck. At this point, it's 50-50 for me. I don't know if it's going to go higher or lower. I see reasons for both. That's why when I see reasons for both, that's when I need that extra confirmation to tell me that it's going to go one way or the other. This technically is the order block or the breaker. All right, so it was violated, and this tells me we're probably going to run lower. Now I want to see if we do run lower. I need this confirmation for my history on understanding mean thresholds of order blocks. Now, the only reason I think it runs lower is because we do have this previous day low here. This is the power. This is why understanding where these higher time frame drawn liquidities are is so stinking important. And taking your trade ideas based on these key levels, not just because we had a change in state of delivery. Now, we can still take that, but for the extended moves, those are what's hard. It would have been much easier to see this level ran and then the 5-minute change in state of delivery to give me confidence that it's going to give me a $50 to $100, 50 to 100 handle move. But I expect that we continue lower here. We just violated this inversion fair value gap right here, or we just created an inversion fair value gap. We just created relatively equal lows. We retagged it here. This would technically be like a short right here. Down to this low. But when you have reasons that it could go higher and lower, these are the trades that look good but can be deceptive, and it can actually hurt you. So I'm putting this on the screen so you could see it, but I would not be taking this trade. Just because you see a trade, something in the charts that says it's going to go lower, doesn't mean you take the trade. Not at all. Especially when you can see price move higher or lower. I think I can see price move in both directions. There's an option. I can see price move both ways. But that's when you just want to sit on your hands. This trade will be violated if we close above this. If we close above this fair value gap. We'll move that up there for a minute. We'll see if this plays out. We got a high, low, higher high, display slower, breaker right here. See what I mean? I see reasons for both higher and lower prices. There's your breaker for lower prices. Let's see if it's going to close. It closed inside it, so still trade valid. Not very encouraging though, I'll tell you that. You got a breaker right here. Inside the new week opening gap. Yeah, this is a 50-50 area, folks. I wouldn't be taking a trade. I have this on here simply because I'm showing you the opposite of what I was looking at and how it could play out this way too. But I wouldn't be taking any trade either way. This is demo. This is a demo trade. Demo only because I'm done for the day. Even if this works out, I wouldn't be like, oh man, I'm glad I took that. No. Because it's 50-50. Yes, it looks good. It does. But I can see it going the other way too. I should go work out after this. I started climbing steps, folks. I started walking the stair stepper. They got one at the YMCA where you just walk up steps. Yep, I hit that age where I'm walking steps instead. I hate running. I'm not a runner. I hate running. So I'm like, I could get a decent workout by walking steps, walking up steps. Turn on something, listen to it. It's a lot of work. I mean, yesterday I walked 2,000. I climbed 2,000 steps. 2,000 steps. That's a lot. It's about 30 minutes of walking. 30 minutes of walking steps. Take a note. Look at how this price action looks in here. This is disgusting. You do not want to be trading this. The only reason I haven't closed the trade is because if I'm going to make a assumption on a trade, I'm going to leave it open until the trade ID is invalid, and it looks like it might be invalid right here. Nope. Still a trade. You can see it starting to get sloppy. I raise this higher to see if it's going to come back down. If it closes above this, then I'm going to close the trade and we'll probably be done for the day. See what I mean? Like, look at this. I mean, this is becoming sloppy and nasty type of price action. This, if it was going to run, it should have ran right away. So it came down here, it retraced into this. It didn't hit the low, so this is where we took that short. We should see it run lower. But when it's 50-50, it just, the probability is less. And we're starting to see crappy price action. So you could, if you wanted, move your stop to here and get out and just call it and just get out if you want. That's a possibility. Anytime you're like uncertain, following your rules is probably the best route. But if you're just like, I just have a nasty feeling about it, move your take profit just below your entry point so that you can just, get two handles and get out. So you don't have to take a full loss. All right, this one looks like it's going to close above. There's the close. All right. So invalid trade there. We're going to be done for the day, folks. Thanks for hanging out with me. Today was there were some great lessons here. Great lessons to be learned today. It was a great day of trading. Great day of following the rules. So we will be back on Monday. Have a blessed weekend. Hopefully you had a good Christmas. Thanks for stopping by. You can, if you're interested, use the code December or DEC 2024 to join the Purpose Driven Trader Academy, which is the day trading course and the Discord that comes along with that. If you want to be a part of our growing Discord, the trading community that we're building over here, we'd love to have you. Check it out. We'll see you guys next week. Take care.